Have you ever wondered how mixed-use developments are transforming downtown landscapes? Welcome to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. Let's get right to it. In a significant move in the commercial real estate world, the Atlantic companies have unveiled a new plan for a mixed-use project in downtown Roswell. This ambitious development is set to rise near the iconic water tower and will feature a combination of multifamily, retail, and office spaces. The project will include approximately 485 parking spaces, providing ample access for residents, shoppers, and office workers alike. This development aims to invigorate the downtown area, offering a fresh blend of living and commercial opportunities. It's fascinating to see such transformative projects taking shape in regions like Roswell. While this development is making waves in Georgia, we see similar trends in places like Kitchener-Waterloo and Cambridge, Ontario, where mixed-use projects are becoming increasingly common. Developers are recognizing the value of creating spaces that offer a blend of residential, retail, and office environments, fostering vibrant communities. In the United States, cities like Roswell are embracing these innovative approaches to urban planning, much like their Canadian counterparts. These projects not only stimulate local economies, but also enhance the quality of life for residents by providing convenient access to amenities. As we continue to monitor these trends, it's clear that mixed-use developments are playing a pivotal role in shaping the future of our urban landscapes. In a move that could significantly alter the landscape of Ocoee, Tower Realty Partners is set to break ground on a new mixed-use project just south of Colonial Drive. The development, known as the Point at Lake Lily, will occupy about 14 acres at 2,970 Old Winter Garden Road and will feature approximately 100,000 square feet of medical office and retail space. Reed Berman, president of Tower Realty Partners, shared with GrowthSpotter that the first phase will include a 14,500 square foot, single-story medical office building, with construction set to commence on June 1st. The project, which is strategically located near the Orlando Health Central Hospital, is expected to cater to the growing demand for medical office space in the area. While the proximity to the hospital is seen as a key driver for demand, the development also holds the potential for a retail component, which could further enhance its appeal. Berman mentioned that they have the flexibility to expand beyond 100,000 square feet, depending on market absorption. Interestingly, the site plan for the Point at Lake Lily offers two options for the remainder of the first phase. The first option proposes an additional 20,000 square foot medical office building, while the second option includes a 12,000 square foot medical office building accompanied by a 3,000 square foot quick service restaurant. Future phases of the development will utilize the western half of the property, which is already zoned for medical, office, and retail uses. The property, long owned by Heller Bros, is adjacent to a recently developed 410-unit apartment community known as the Alibi at Lake Lily. This residential complex, developed by 4Property Co., opened last year and features a clubhouse designed in the style of a 1920s-era speakeasy, alongside a modern pool deck. The presence of such residential amenities nearby could further bolster the attractiveness of the new commercial development. In St. Charles, Missouri, Dierbergs Markets is taking a significant step forward in the retail sector. The company has announced plans for a new 73,000 square foot store. This store will serve as the anchor for a new 100,000 square foot retail development. The project is set to open its doors in the fall of 2026, marking a notable expansion in the area's commercial landscape. This development is expected to boost the local economy by providing new shopping opportunities and creating jobs. The presence of Dierbergs as the anchor store is likely to attract additional retailers, which could further enhance the appeal of this retail hub. It's a move that underscores the ongoing growth and transformation within the retail sector of St. Charles. Such developments are not only significant for the local area, but also reflect broader trends in the commercial real estate market. In Canada, particularly in regions like Kitchener-Waterloo and Cambridge, Ontario, similar expansions in retail and commercial spaces are seen. These developments provide crucial infrastructure to support growing populations and evolving consumer needs. They also offer insights into how cross-border trends in commercial real estate can influence regional growth. In the United States, cities are increasingly focusing on creating retail environments that serve as community hubs. This approach is mirrored in Canadian cities, where the integration of retail within larger mixed-use developments is becoming more common. Such strategies not only meet the demands of modern consumers, but also foster economic vitality and community engagement. In a noteworthy development in the East Bay commercial real estate market, a local investor has acquired a substantial office building in Walnut Creek at a significant discount. This acquisition highlights a trend where investors are capitalizing on reduced property values in the area. The office building, located in a prime position, offers a considerable opportunity for redevelopment or leasing, given the current market conditions. This transaction underscores a broader pattern we've been observing across North America, where savvy investors are looking to capitalize on the evolving office space market. As companies continue to adjust their real estate strategies post-pandemic, opportunities for acquiring office spaces at lower prices have emerged. This trend is not only relevant in the United States, but also resonates with markets in Canada, such as Kitchener-Waterloo and Cambridge, Ontario. In these regions, investors are similarly seeking to leverage market shifts to secure prime real estate at advantageous prices. The Walnut Creek acquisition is particularly intriguing given its potential for repositioning or redevelopment. As the demand for flexible office spaces grows, properties like this are becoming increasingly attractive to investors looking to cater to new tenant needs. This dynamic is mirrored in Canadian markets, where the demand for versatile office environments is driving investment and development. It's crucial for investors and developers alike to keep an eye on these trends, as they represent significant opportunities for growth and innovation in the commercial real estate sector. By understanding the cross-border implications of such transactions, stakeholders can better position themselves to take advantage of these emerging market dynamics. In a significant update from the bustling streets of New York City, JEMB Realty has secured a 55,000 square foot lease for an Old Navy flagship store. This new retail space is located at 50 West 34th Street in the heart of Herald Square in Manhattan. It's an exciting development as the space, which spans 2 floors, was previously home to Samsung and the Harry Potter experience. Now, it will serve as a flagship store for Old Navy, marking the largest retail lease signed in New York City so far this year, according to JEMB Realty. Ariel Schuster of Newmark, along with Gap Incorporated's real estate team, represented Old Navy in the lease negotiations. Meanwhile, LMJ Realty, a subsidiary of JEMB, represented ownership internally. This strategic move by JEMB Realty not only highlights the continued demand for prime retail locations in Manhattan, but also underscores the resilience of the retail sector in major urban centers. It's interesting to observe how these developments in the United States can resonate with trends in Canadian cities such as Kitchener-Waterloo and Cambridge, Ontario. In these regions, we are seeing a similar push towards revitalizing retail spaces to better serve evolving consumer demands. The integration of flagship stores within urban centers is becoming a common strategy to attract foot traffic and enhance the retail experience. This cross-border relevance is vital as it provides a glimpse into how major retail players are adapting their strategies to remain competitive in diverse markets. As cities on both sides of the border continue to evolve, the role of large-scale retail developments in shaping urban landscapes cannot be overstated. These projects not only drive economic growth, but also create vibrant community hubs. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. See you on the next one.